Alright, main thing that I have learned in the big 2025 is that all of these hoes are going. But another thing that I have also learned is that you need for you to be able to trade and be a profitable trader, one thing you have to understand is narrative of the market. You have to understand why the market moves the way it does. Now, I'm in here with one of my students, Andy. Shout out to Andy. So he will be getting the sauce before y'all just come to the YouTube channel or whatever. But we're gonna be explaining narrative. Now, what is narrative? Because we have narrative and we have bias, okay? And Andy, make sure you're taking notes. You feel me? Narrative and bias, okay? What the reason we say that bias is what you believe that the market is going to be. So you can have a bias that the market is going to be bullish, okay? You can have a bullish bias, or you can have a bias that the market is going to be bearish, and that's for the entire day. But narrative can be just on a simple time frame, or for like the first or the second 90 cycle, or the first macro they come in. You can have a narrative, and that narrative can be as simple as, oh, we're going to take Asia highs during the London session, or we're going to hunt London lows during the New York session. That is what your narrative should be. A narrative is okay, where the market wants to go, and you have good reasoning behind it. Okay, so actually, let's look up the definition of narrative. A spoken or in the form or concern with narration. That is not what I'm trying to look at. Never mind. This don't even make any sense. Why did I bring this up? But yeah, the narrative will tell you what the market is going to do, or why these past candlesticks, right? If we go back, go back in time. We go back in time like this, right? We see that in the past, when we got up to these areas, these highs, which was Asia highs right here. This blue is Asia highs. We got the blue when we got the Asia highs. We started to get a little iffy at these. We got a little candle range, and what else did we have? We had manipulation above up here on the 5 minute. We have manipulation right up here after that accumulation, the accumulation phase. Okay. So right now we don't specifically have a narrative, okay? Because our bias can still be, or our narrative can still be, to climb up higher into this fair value gap up here, this imbalance, or even these highs up here, as well. So we don't really have anything right now to tell us what we're going to do, but what we do see is this huge candlestick right here, this huge displacement down. Okay, so what does that tell us? What narrative do we have now? Oh, we're either going to just come out and sweep these lows and go higher, or more than likely we're going to sweep out London and Asia lows. Because why? We already took out this buy side liquidity. That is our narrative. Okay, now once you see that, once you have your narrative, now you need you a setup. Okay, that's all the narrative is. Or it's like you looking in the past to tell you what the market is going to be doing next. That's it. You're not predicting it necessarily, but you predicting it necessarily. And as we can see, we sweep these lows. So I would like to see some pullback. Oh, never mind. We just dumped. Okay, there go the pullback. Like to see some pullback into this fair value gap. And here, you could have entered in on this candle right here. Could have entered in on this candle, because we can see that we respecting this. We might have pullback up in here, but just to play it safe, what we'll do, we go in for a sale and aim for these lows down here, 60, like that. Have our stop loss above that wick up here, and take profit down here. Boom, just like that, and we'll let this bad boy play out. Okay. There we go. Take profit just hit. Take profit hit just like that. Andy, okay, Andy, do you have any questions here? Like, does this kind of make sense to you?
Yeah, it makes sense, but that was risky though.
Yeah, it was a risky trade, because like I said, we can have pullback, come back up into here. That's why I
Yeah.
had it above this wick. But yeah, we could have had, like I said, we could have pullback come up here because we got buy side liquidity up here as well. So I like to see that wick and then push down. That was a risky trade though. No, I'm gonna actually, you know what? I'm gonna be real. That was actually a good setup trade in my opinion. Reasons why I say that is because of this 5 minute fair value gap that we respected. We came into the 50% of that range, and we just had our stop loss at a good point. You feel me? We had our stop loss at a decent point. I
Yeah.
did two contracts right there. Let's go back. I think. Hold on, give me 1 second. Dang, why can't I see how much this trade would have been? I think this trade you would be risking $500 to make 3,000 or 1,500. This one of those. I don't really know, but yeah, that's the reason. But the reason you want to have a narrative because it'll make it easier for you to understand what you want to do in the market. If you don't know what the market is doing, try to find a narrative. All right. So we see that we have already taken Asia, and we already taken Asia highs right here. We already taken Asia highs, and we came up to these highs over here, and we are inside of a let's go to the 1 hour. Boom. We are inside of this range over here, or we also are inside of this 1 hour order block. 1 hour order block right here. You feel me? Or rejection block, whatever you want to call it. And these 1 hour candlesticks are telling us, or these are algorithmic signatures that the market is going to continue downwards. Okay, are we going to continue to play inside of this 1 hour range right here? You see this? We're playing inside of this 1 hour range. You don't just you want to use how you find your narrative is you typically use the past sessions. So we typically use the past sessions, and we also use the higher time frames. Okay, we can use if we use the higher time frames, that will give us a great what's the word I'm looking for? A great idea of what the market wants to do. You feel me? So that this narrative was a great it was a great trade. You feel me? This was a great trade. Why? Because we were expecting, since Asia lows already got taken during New York session, what do we want? We wanted to see London lows get taken. Now we probably just end up playing in this range until we see any and this is just chop. Oh my, was this during December? Oh no, this was Friday. Dang. Friday was just straight chop session. Okay, boom. Once we see that. Oh, it's not. Okay. Boom. Once we see that, we see these candlesticks, these green. Let me delete these drawings because I can even see it myself. But yeah, once we see that, Asia lows, not Asia.
New York.
New York comes and sweep out Asia and London lows. Okay, we want to wait for the next candle to change because this candlestick is very bullish. This is a very bullish candlestick. But as we already seen, we have been in a choppy day. But from my narrative, we've been chopping. You feel me? So what do we expect? Well, we don't expect anything right now because we don't predict it. You feel me? We wait till the next candle open. Okay, we see a dump here. So we came above this. We closed pretty strong above the highs. But what we have next? We have a dump session, right? We see a dump session. Okay, let's see what the next candle is. Boom, another push up. Okay. All right. Don't overcomplicate things here. Let's keep it a book. Let's go to a higher time frame. In a higher time frame, dang, I hate how this works. I hate how this works. Higher time frame, what do we see? We are in a 1 hour fair value gap. 1 hour fair value gap right here. And I didn't mean to go to the 1 minute. We're in the 1 hour fair value gap. And let's see these next candles keep going on. Boom, we keep climbing. On the 5 minute though, what do we have on the 5 minute? We have some form of buy side liquidity up here. So if we go back, let's go back in time. During this case study right now, okay, we see that this next candle right here, this next candlestick right there, this tells us that we most likely will go higher. Now, you might not be able to take a trade right now, but it do inform us that we can go higher. And what can we be looking for next? These candlesticks up here. Okay, so boom, and that's where we go to. We just seen that. When we get up here though, we see a wick and we see manipulation of these highs. Okay, this is manipulation. What time is this? This is also at this is at 9:30. Okay, this is also coming inside of a macro time. So once we see that we have manipulation until this also is a 5 minute fair value gap right here that we are tapping inside of. 5 minute fair value gap right here. Sweep of liquidity over here at external liquidity. Entering inside a 5 minute fair value gap, boom, and then we see this placement right here. Perfect. You could have got in for a sale right there. You can wait for a pullback to get in. Did my screen just start sharing? Okay, hold on. Let me make sure. Oh, bro, my recording messed up as well. Hold on. Making sure. The thing is with narrative, all you are doing is looking for you're basically waiting for signatures. You're waiting for entries and waiting for you get what I'm saying? Like you wait for the market to show you something. The market is showing us that here the market is showing us that we might be going back down. Okay. What I like to do, I want to go back here. I see that we come up to these highs. What's the next thing we do? We dump just like that. You feel me? If we go to the 5 minute time frame, we see that this little key signature. We respecting this 5 minute fair value gap. We could have got in for sales here, or we can get in. This would be a way better entry to get in for sales. But I actually think we might pull back up. Yup, pull back up and then sweep of liquidity. I will get in here. I will get in for sales here, aiming for these highs. Cause why? We have a clear bias that we want to go down. The reason we are coming up this high is so that we can grab liquidity. You feel me? Grab liquidity and continue downwards. Have our stuff like that, stop loss like that. Just let that thing play out. And boom, take profit hit just like that. You feel me? Take profit hit just like that. And the reason, like when you have a narrative, the reason it's so important to have you one is because it make it easier for you. You feel me? We see that our narrative here, we see that we are still hunting liquidity. We really don't have nowhere else to go besides upwards. You know what I'm saying? And what we're going to typically do is before we move up, we're going to move down. You see that we're respecting this level right here. So what we're going to do, we just going to play this range. We're going to aim for the next side of liquidity. You feel me? Now I would like to see it come, since we just dug into that thing a little lower, pause. I would like to probably see a little bit. Nah, we dump here. Yeah, we just dump here. Yo, and that's really it. That's all narrative is. This narrative, we can see, since we have key signatures telling us that we're going down, what will we be going to next? Most likely New York lows right here, right? You know what I'm saying? Before we go higher, we most likely be going to New York lows. Oh, never mind. We respected this what's in that right here. But yeah, you get what I'm saying though. We see that we respected that 5 minute order block right there, and we pushed up higher, and we're going up for New York highs, and just playing this out of that range, boom, just like that. You feel me? Like once you get to the best things to use to understand your narrative or to grab a narrative. I use the past time sessions or the past trading sessions. So I use not New York. I use London and Asia for my narrative. So if I see, usually when the market opens, usually the market goes for a low of these past two sessions over here, London and Asia, or the high of those, and then it's after it grabs that liquidity, it's going to go in the opposite direction. Now that doesn't tend to happen all the time, but I have seen it happen a lot where we'll sweep, like right here for instance. Hold on, let me close my door. This dog is barking. It's gonna be tight. Right here, for instance, what we do here, as soon as the market open, what we do, we sweep both London and Asia sessions, and what we do next, we push up for their highs. We sweep their lows, and what we do next, push up for their highs. Let's go here. And as soon as New York opens, what we do, we sweep London highs, and what we go next to, we sweep London and Asia lows. Go to the next one. Soon as market open, we were already down below this, But what we come and sweep Asia high, I mean lows, and what we go to next, we go for their highs next. You feel me? Like it's a clear narrative. We have a clear objective in the market, and it's to of course grab liquidity. But using these time frames, using these past time frames, will help you grab your narrative so much, and you can add those narratives. Okay, these are like, because these are significant points in the market right here. For example, it's like we dead literally come and sweep these lows and fill this end dog out right here. And what we do next, we go for their highs. You feel me? Even during the lunchtime, what we do is sweep Asia. We sweep New York highs, and during lunchtime and New York PM, we come for both the lows. It's that simple. That's how you grab you a narrative, by using past time frames, or past trading sessions to help you gather your narrative. Because your bias and your narrative are two different things, and that's because your bias for the day can be bullish, but your narrative for your trade can be bearish, if that makes sense. So if I was to hop in the trade, I can have for this day right here, I can say, hey man, I expect us to continue up all day during the New York session. But if I wanted to trade, like take a trade somewhere, I want to hop in a quick little trade, I can hop in this trade, go in for sales. Why is that? Because we have already swept London highs and Asia highs. What I'm going to expect us next to sweep out both of their lows, because we already took their highs. You feel me? Boom. That's my narrative for them. But I can have a bias during the New York session. We're going to be high, but my narrative for my trade is bearish. You feel me? I said that vice versa, but you get what I'm saying. That's all. Did I share my screen? Yeah, okay. That's all your narrative is. Especially, you need a narrative for your trade. You need a reasoning, or you need a where the market is going to go for your trade. So when you take this trade, okay, I expect the market to go here for this reason. Because of this thing that happened. That is your narrative. You feel me? That is your narrative that you are building. Your bias and your narrative can be completely different, because your bias can be for the entire session. Your bias can be for just this one trade. You feel me? Your bias is a universal thing. The narrative should be just specifically for the trade that you are taking. Why you are taking that trade. Boom. That is all the narrative is. If you got any questions, Andy, you can ask away though.
So like, how do you use the high time frame to
You said,
like?
how do I what?
How do you use the high time frame to
Higher time.
understand?
Okay, bet.
Yeah.
Bet I got you. So what I typically use, is the 4 hour, and the higher time frames. They just have a little bit more information. No, the higher time frames, they I say you use those as key levels. You get what I'm saying? Like, so if I was use
Hmm.
my higher time frames like this, right? Let me delete these drawings. I was use let me show you. I use these for like previous highs and lows. Okay, so I'm trying to find a good point I can show you. All right, so if I go to if I'm using the 4 hour, right? I see
Yeah.
on the I see on the 4 hour. We just marked out this high. I mark out this high right here. We close above this high. Okay, we close above this high. Now, when we are trading like this, when you are trading a higher time frame, the how I explain it. You don't want to never enter a trade on a higher time frame, but these help you understand where the market could be going, because these are, I call them roadblocks. These will be considered roadblocks. So I see that we just knocked out a high right here. Okay, we
Hmm.
got two things that we can do. We can continue up higher to these highs up here on the 4 hour, right? We could continue up to these highs, which would be 100 more points, or we can sweep this liquidity and continue lower. Of course, you get what I'm saying.
Yeah.
So next, what you would typically wait to do is, if you're trading, you don't want to wait 4 hours. But if you wait 4 hours and you see that, oh, with the next 4 hour candle, we closed above this high, right? And we closed pretty strongly above this high. Okay. So what you would do next is you will go on a lower time frame using these previous highs right here, because this would be considered your narrative. Your narrative is that, oh, we most likely would be seeing these highs. We most likely would be coming and tapping inside of these highs right here, right? And
Yeah.
my bad. Dang, that was a bad stuff. Other
No, you
things that
good.
are very strong are like fair value gaps inside of the higher time frame. Like a higher time frame fair value gap is really strong. We respect those a lot. Higher time frame order blocks are very strong. We respect those a lot as well. As you can see, we had a small rejection when we come into this 4 hour order block or rejection block. I don't matter. It don't matter. You look, you see how we come up into it and we're respecting it. You feel me? Like time is very fractal. So more than likely on this 4 hour, if we go down to the 5 minute, all the way over here, we probably got. Let's see. We got some key signatures of the market going down. What else we have? We got liquidity up there that we just sat there and manipulated all the way over here. You get what I'm saying?
Mhm.
But I use these for the 1 hours. They can be used as like depictions of for your take profit or depictions of where we are inside of the market. You look at, okay, where are we at over here? We are in the form of where a lot of liquidity is sitting. You feel me? You got a lot of buy side liquidity up here. So I really would be expecting us to take out this buy side liquidity and go down lower. You feel me? We keep coming in. We keep seeing signatures that we are respecting this order block. We disrespect it right there. We might now next thing, like I said, if you was trading here, your narrative should have been okay. Uh, okay, I see that we not on this candle. Not on this candle. This candle right here. This candle right here. You see that this candle is made, right? We close above this high. Okay. Next thing we do, we go to a lower time frame. 5 minute time frame specifically. And what haven't we done? What haven't we done right now? We haven't taken out New York highs. So this should push your narrative more that we more than likely would see a upside. You know, we more than likely see us continue up because we still haven't taken a previous session high yet. So we can look for an entry. If we get one, we just climbing up. Look for an entry. You can buy in here. That'd be like 30 points. You could buy in here and go up for the aim for the highs. And boom, you would have hit take profit just like that if you would have bought in there. That would have been 40 points. So let's see how much that trade would have accumulated you right here. Buy, we'll say TP up here. It would have been a nice little trade actually. Waited for an entry, got in at a pullback of a fair value gap right there, and pushed up higher. Why? Because we have a 4 hour time. On the 4 hour time frame, we have highs sitting at this level. You feel me? We got highs sitting at this level, so it will make sense for us to go to those highs. That makes sense.
Yeah, that makes sense.
Okay, bit. All right, bit. That's all you had. That's all you had.
Yeah.
But yeah, definitely use the higher time frames as like key levels. I'll use those as key levels and use the New York's the use the new the dang use the higher time frames for key levels and use the past trading sessions as key levels as well. So their highs and their lows are very important. The 4 hour highs and lows are very important. You get what I'm saying? Because you will more than likely see on a 5 minute fair value gap, you will more than likely see a 5 minute fair value gap get ran through or disrespected more often than you would see a 4 hour fair value gap get ran through or disrespected. That makes sense?
Hmm.
All right, but yeah, this it. Use the key level, and this could be an entry right here point as well. I'm gonna teach you about. I'm gonna stop recording. I'm gonna give you some sauce, but that's for later on. I'm gonna record this like for later on. God loves y'all boys. That is how you find your narrative. Using time frames and higher, past trading sessions. I catch y'all in another video. Let me talk to Andy real quick though.